Good morning, all. All is me. All right, we have our first visitor of the day. Anthony's here. Hi, Anthony.
Good morning.
How you doing?
I'm doing all right. I don't like this chapter.
You having trouble with your debits and credits, huh?
I would say, yeah, that's fair to say.
Okay, maybe I give you a couple of mnemonics that people like. I'll show you that in a short bit.
All
So,
right.
yeah, all right, we'll wait another couple of minutes here.
Okay.
And I'll repeat this one if we in a few more minutes. Chapter 1, just a brief introduction, a little bit about accounting. Chapter 2, we went into doing these transactions using plus minus, keeping track like that. And then in chapter 3, we introduced you to the general ledger. We introduced you to the T accounts and the debits and credits and all that. Chapter 4, which we'll do now, is about writing what are called journal entries. Your book calls them general journals. The world calls them journal entries. And the journal entry is the mechanism for getting the information into the general ledger. In other words, you sit down at your computer, whatever it is. Okay, here we go. We got Andrew. Give Andrew a moment to come in here. Hello, Andrew. How are you? You are mute. Andrew is mute. Andrew, unmute yourself if you can.
Hi.
Oh, hi, Andrew. How you doing? Welcome to the class. Do you want to show your face, Andrew?
Yeah, I can do that.
Okay, you're not in the witness protection program or anything, right? Okay. All right. Well, we know what part of this tape I have to trim, huh, before I turn it in. Okay. Hey, Andrew, your first time joining us here?
Yeah, I gotta run soon, but I thought I thought I should check in and just see what's
Okay. Okay. Good to see you here. All right. Let me start by sharing something. Okay. Going to chapter 4. And Andrew, are you perfect now with your debits and credits? No hesitation?
Yeah.
Really? Well, that's good. I mean, if that's excellent because that's
I think I am. I don't know.
all right. Real quick, debit or credit? Accounts payable. Does that have a debit or credit balance?
Credit.
There you go. There you go, Anthony. See, Andrew, you can make. Anthony says he's still fighting with that. Okay, we'll go over some more here. Okay, this will be the starting point of our class. Everything prior to this is going to get chopped out in the editing. Hi, Aranza.
Good morning.
All right, you ready to roll here? Okay, here we go. Chapter 2, we started to learn about the counting equation and how cash goes up and cash goes down when you spend money, expenses go up and down. And chapter 3, we did those same types of transactions, but we did them in the sense of accounting with the T accounts, with the general ledger. We're using the terms debit and credit, which just means left and right. That's all that means. And there are 6 rules about those where you just have to have them memorized. And I'll help you as best I can. Describe the flow of data from source documents, huh? Oh boy, this is exciting. A source document. All we're talking about is a piece of paper like an invoice. You get an invoice, a bill from one of your suppliers. Well, you look at that, you say, wow, we went out, we bought some supplies. This source document tells me how much the dollars were, and you use that to enter into your accounting system. Source documents, it could be invoices, check stubs, letters, emails, even texts, whatever communications you might get, you can print it out, and you're going to use that to prepare your financial transactions. So Source documents, not going to spend any real time on this. Any document that provides information, source document. The auditors are going to come in and they're going to say, what's this transaction here where you bought $5,000 worth of supplies? What was that all about? Well, you're going to look up the journal entry and show it to them. And perhaps attached to it is the invoice from the supplier. Or if it's not attached there, you certainly have it in your file somewhere or available online to show the guy that this was a legitimate transaction. Source documents is a trigger, gets you going, begins the process of entering, and they're evidence of the business transaction. Okay? And you file them away. Having objective, verifiable evidence that a transaction occurred is an important concept. And they're just showing you other examples: check stubs, copies of checks, receipts, cash register tapes, sales tickets, all kinds of things. Now, I can't speak for the modern world quite as an expert, but up until I retired about 50 years ago, we were printing out the journal entries and stapling copies of these source documents to the back of them, so that if an auditor said, what's this transaction about? Even though you don't remember it from 8 months ago, this will explain everything. Source documents. Let's talk about the chart of accounts. The chart of accounts. That's the list of all of the pieces of the business that you decide are important enough to have its own journal, if you will, its own world, its own piece of the general ledger. Cash, accounts receivable, inventory. The chart of accounts is always done in the order of assets, liabilities, equity, revenues, and expenses. Notice here that they have what are called account numbers, account codes. And take notice, please, that the assets begin with 1, the liabilities begin with 2, 3 for equity, 4 for revenues, 5 for expenses. That's very typical. You don't have to do it that way, but that's pretty much how the world does it. So the sequence of the chart of accounts is your accounting equation: assets equal liabilities plus equity, sales, revenues, fees, whatever you want to call them, and expenses. That's the chart of accounts. Now, what we're going to do in this chapter are called journal entries. Journal entries, or general journals, your books call them, okay? A journal, day-to-day listing of the transactions. They provide a record, commonly referred to as the book of original entry. That's a fancy term. The simplest journal form is a 2-column general journal. I wish they would use the words journal entries. 2 columns, any kind of transaction you could do here. And we're going to call this journalizing. Journalizing. Journalizing is the act of updating those T accounts. For every transaction, you're going to see a title, the title of the accounts, the date, the amounts, and a brief description. I think is quite important, although we're not going to make you do that, I don't believe, okay? And I can't believe they haven't shown what the journal entries look like yet. Let's take a look at this first transaction, and then we'll concentrate on what the journal entry looks like and how it's presented, okay? So let me move this over here. Oh my goodness, this guy's opening up that business again for $5,000. You know, I have a feeling that Mitchell went out of business twice, and now he's trying to open it up for the 3rd time, you know? Okay, he opened up a business with his own money. This is a journal entry form. This is what you're going to see when you go into your computer system and you're going to type this information in. So the date of this transaction is June 1st. And here's how we do it. You will put the date under the date, huh? Description is the account name. So we're going to debit cash. That increases cash. Debits increase cash. Assets have a normal debit balance. And the credit goes to Mitchell Williams Capital. So let's take a look at this first journal entry, the first one you're seeing. A couple of things I'm going to point out. the explanation can be super important for a couple of reasons. And it doesn't even have to be this long. My whole life, every journal entry I ever entered or hand wrote, the explanation always began with these two words, to record. Now, this guy put down, he didn't write the words to record, but to record owner's original investment in delivery business. If he had just said to record investment, that would be enough. The explanation is important for two reasons. One reason is this: you're not going to remember every journal entry you wrote in the past. You're not going to remember every journal entry. So by putting that tiny, tiny little bullet below, as soon as you see this journal entry, you go, oh, yeah, that was when I started the business. I forgot that $5,000. So that's one reason the explanation is important. And the other reason I would say is this: as you get involved more and more, you'll do more complicated journal entries. You might have multiple lines, and you will try to write an explanation for it. If you're having a tough time writing a short 6 or 7 word explanation, if you start by saying to record, and then you start saying, you say, what am I trying to do here? That's a very good invitation. Your journal entry is wrong, and you need to look at it. I will point out a very important thing. Notice the indentation on the credits. That's important. You always indent the credits. So let's get into that habit. And indent the credits, explanation, and here we go. We debit it, credit it. And this posting reference, this could be whatever the company wants to put there. Perhaps once they enter this into their system, it'll pop up a number there, linking it to the general ledger. Let's also understand what we're doing here in terms of the process. You're in your computer system now, QuickBooks, Oracle, Mass 90, whatever you're using. And you sit down and you go, I debit cash, I credit capital. And then you look at the journal entry and you double check and you say, I think it's right. You are then going to hit a button on your computer that says, on your computer screen, that says post. Once you hit post, this now goes into your general ledger, your T account, and it is a permanent, unremovable entry. If it's wrong, you can't erase it. The only thing you can do is, the best thing you can do is reverse the journal entry to get everything back to zero and then put the correct one in. So posting is the art of entering your transactions into the general ledger. Compound entry just means more than one debit or more than one credit. We try to put the debits before the credits, okay, when you can. It's sort of it's a convention. It's a courtesy, really, because it makes it a lot easier to read for the auditors. So when you can, put the debits first. You can't always do it, but that's what we strive to try to do. And here they're showing some journal entries. So let's take a peek here. I'm going to zoom this in a little more. Ooh, that really zoomed in nice, huh? So let's look at a few more journal entries here. Remember, he bought that $80 worth of supplies that was going to last him for months. We debit supplies, which is an asset, and we credit cash, which is another asset. The journal entry, whammo, we hit post, that'll go right into our general ledger. The second one on the 20th, cash accounts receivable. Okay, it looks pretty much, we can look at that and kind of figure out, well, let's see, cash was debited, accounts receivable went down. The only way accounts receivable goes down is if somebody paid you. But you like to have a little more of an explanation. And in this company, he writes to receive cash on account. This could have been simplified to record library payment or something simple like that. Here is what they were just talking about with a compound entry. A compound entry means you have more than a debit and a credit. Remember, he bought the motor scooter with a down payment of 300 and he took on debt to pay the rest, you debit the delivery equipment, which increases it. Accounts payable is increased with a credit. Cash is decreased with a credit. Okay. Here is an important point I want to make. Should have said this up front. Every journal entry has to have one debit and one credit. You can't have a journal entry with two credits, with two debits. You have to have at least one debit and at least one credit. You have to have one of each. You could have 100 debits and you could have one credit, or you could have one credit and 52 debits, but you have to have one debit and one credit. That's why this is called double entry accounting. When this was invented by a Roman Catholic priest in 1494, that's the rules he set forth. Okay, Father Luciana, I forget the guy's last name, and so on with these other journal entries here. That's a look at what a journal entry looks like. Let me also demonstrate, and you might have already noticed this, the general ledger, this journal entry, kind of looks like your T account, right? You have a debit side, credit side, whammo, there's your T. So that's why we were saying that those T accounts we introduced you to in chapter 3 mimic the general ledger. And we'll show you the general ledger shortly. Okay, so we've written some journal entries. We did all those journal entries. Remember, we did all those transactions in chapter 2. And then last Tuesday, wow, just a couple of days ago, Tuesday in chapter 3, we laboriously, but efficiently, I hope, did all of those postings to what I'm calling the general ledger. And I think we learned at the end of that, we prepare a trial balance. Remember the trial balance? The trial balance. We're going to post to the general ledger and prepare a trial balance. Let's get a look at the general ledger. Complete set of all accounts used by a business. You can have as many as you want or as few as you want. You just set them up the way you like. For example, you might be a company that has just one account called utilities expense. Utilities expense. And that's going to cover electricity, gas, and water. Or you could have 3 accounts, one for electricity, one for gas, one for water. You can make them as detailed as you want, or just put them in the buckets that you want. And the general ledger is going to be numbered and ordered exactly like the chart of accounts, which we know are assets, liabilities, equity, revenues, expenses. Hi, Rodrigo. I didn't see you there for a second. General ledger used to keep a complete record of the debits and credits made. The general ledger is the books. Oh, you've heard that expression. He's cooking the books. I want to see the books. The books is the general ledger. And T accounts were introduced previously. However, business are more likely to use a version of the account called the general ledger account. The general ledger, which you're going to see, is pretty much a glorified T account. T account. Do you recognize this T account from chapter 3? I hope you do. This is what we did in chapter 3. Mitch started the business for $5,000. We debited cash, and then we credited in another T account capital. Here he collected money from customers and we credited delivery fees. He collected money from customers and we maybe credited accounts receivable. Here he bought something, he spent money. At the end of the month, he had a balance of $470, which we got by adding the debits, adding the credits, and the high man wins. Whichever number is higher, that's the balance, okay? So all month long, you've been posting, boop, boop, boop. Here is what your general ledger looks like for cash. Here's what it looks like for cash. Debit $5,000, huh? There's your T account, debit. The general ledger is really a double T account. Over here is the balance. So when he started the business with $5,000, the balance of cash was $5,000. Then the second entry, B, was $2,000, and that's a credit, $2,000. So now his balance is $3,000. He spent another $600, as you can see up there. Balance is $2,400. So the general ledger shows you the individual posting, and it shows you the running balance. Now, hopefully we're starting to get familiar with debits and credits. I know some of you can still battle this for a while because it doesn't come real intuitively. But we know that assets have a normal debit balance. And by a normal balance, I mean the side of the T account, left or right, which increases it. Cash is an asset, so it should have a debit balance. If you're running your balances down for cash and you have a credit balance, that indicates that you made a mistake, or you're playing the old float a check game where you had no money in the bank account, but you wrote a check anyway for $500 today, knowing you're going to get a check in the mail tomorrow for $2,000. That's a dangerous game. My point being, at the end of the month, if you have a credit balance in cash, there's something wrong, and you're going to have to go back and kind of figure out what's going on. In a worse scenario, somebody stole some money, okay? Negative balances for cash, no good. Posting to the ledger, huh? Posting. That's our journal entries. The process of copying debits and credits from the journal entries, or the general journal to the general ledger. Done daily, really, in the real world. You know, one of your routines, if you're working in the accounting department, be you are the one who's responsible for preparing journal entries. I mean, that's not all you're going to do. There'll be always some kind of analysis going on. You're going to be in meetings. But every day, you know, you're going to get a bill in the mail that needs to be recorded. Your boss hands you his expense report, something like that. So the 5-step process, again, don't try to memorize the 5-step process. It'll come to us. But you enter the date. You got to put in the debit and credit, get the balance of the account. If the balance of the account is 0, draw a line through the debit and credit column. I don't know about that, but we'll take a look. And you enter the journal entry page in that reference. Let's take a look at it. A picture's worth 1,000 words. Here we go. Here is your general journal, the journal entry. So you sat down in QuickBooks and you said, okay, I'm Mitchell Williams. I'm doing my own business here. I debit cash and I credit capital, and I type in owner's original investment in my business. At that point, nothing has happened in the general ledger. Nothing. You might write a few more entries after this, but the minute you hit post, the minute you tell your accounting system to post, you create this eternal record here of $5,000. 20 years from now, if the auditors really wanted to go back that far, they would still see that there. If you make a mistake, the best way to fix it is not immediately, but when you find out you're wrong, reverse it. And on the explanation, say to reverse journal entry, whatever, and then do it properly. A friend of mine I worked with for a number of years was doing a journal entry in an old beat up accounting system online. And somehow, instead of typing in $1,000, he typed in like $1 million. And he hit the post button. And as soon as he hit the button, he went, ah, made a noise. And it was no problem. He immediately reversed it with the proper backing up and put the right number down. I think it was $100. But we used to tease him because every time the auditors come in, that $1 million and the -$1 million stood out like a sore thumb. and generated questions, okay? Posting to the general ledger. We have posted everything to the general ledger, okay? In Tuesday's class, we took the balances from those T accounts. And now I hope you're getting a sense that those T accounts were the general ledger. So now we're going to prepare the general ledger. And the only thing, well, I'm going to say two things this thing does. The trial balance just proves that debits equal credits. You'll never have to worry about that. You have my internal assurance on that. No computer system is going to let you post an out of balance transaction. And the trial balance can be prepared anytime you want. I've never been in a business where it was prepared during the month. You know, there's no real need for it during the month. I guess you could do it. It's pretty much done at month end. And the second important reason, besides proving debits equal credits, is this is the source for preparing the financial statements, the trial balance. And I think you should remember the trial balance from Tuesday's class. We had that balance of 470 in cash and these balances. Now we have credit balances here. Mutual drawing is a capital account, but it's a contra with a different sign control. Delivery fees, expenses. And remember what I said, you draw a horizontal line above your first sales number. Everything below that is your income statement, and everything above that line is your balance sheet. So you've got the trial balance done. Now we're ready to prepare the financial statements. How to find and correct errors. I'm just going to talk about this briefly. Even though the trial balance indicates that it's in balance, the ledger can still be all wrong, huh? Journal entry was made to the wrong account or wrong item. Careful, so I'm telling you to be careful before you post a journal entry. Who knew, huh? Not going to go over this really too much at all. Double check your work. There's just one I want to talk about because this was always a big help in the old days. Who is familiar with a transposition error? Transposition error. If you guys have a calculator in front of you, put in a number, any 2, 3, 4-digit number you want, and then transpose any two of the numbers. For example, here, 250 was the amount that you wanted to record, but you made a mistake and you put in 25. The difference will always be divisible by 9. It's just a little accounting quirk. Let me give you a better example. You wanted to type in 36, but you actually typed in 63. 63 minus 36 is 27. It's divisible by 9. Now you're probably thinking to yourself, who cares about this? This is a fun little trick at a party or something, you know? In the old days, back when you did this stuff, and so you'd do the trial balance and you'd be off. We're off on the trial balance. We have more debits than credits. You would then, first thing you would do is take the difference. And if it was divisible by 9, there was a very good chance your error is what you call a transposition error. And knowing that, it was a lot easier to run your finger down and see what you might have typed in wrong. Transposition errors, they're kind of fun. If the tips don't work, keep working at it, huh? Correct, you never erase. You never erase. Make the correction in a manner. Make the correcting entry. You never erase. It's like in a doctor's office. One of my favorite shows is Law and Order, and the other night there was a doctor who used whiteout when he made a bad prescription, and he's in jail now, by the way. Correcting method. Assume that a $400 payment was debited to repair expense by mistake. You meant to put this into rent expense. What they're showing you here is if you debit rent expense, now the rent expense is right, and you credit repair expense. That's not a good way to do it. You really do want to reverse and then put the right number in. As you get more and more into accounting 230, you're going to realize that this is not a good way to go for various reasons. That's the end of this chapter. Is that possible? That's all there is to it. Hey, you guys have to stay with me a little more because I want to show you something, okay? Let me get into Excel here. I can't believe how short that chapter is. Let me find this. I think I have it here. Here we go. This is exactly what I wanted to find, okay? Can you read all that clearly? This might help you learning your debits and credits. It's a T account. You can take a picture of it here or copy it down. Look at my T account. Notice they both say plus. They both say plus. Why do they both say plus? Because after eating dinner, assets, expenses, drawing. After eating dinner, let's read comics. Liabilities, revenue, capital. This was suggested by Professor Reyes. He gave me this. I used to make up, like I tried to make up humorous ones, and they were mostly humorous to me. So I think this is better. So this might help you. After eating dinner, assets, expenses, drawings, let's read comics. Liabilities, revenue, capital. What do you think, Anthony? Something like that might help our class?
All I can see is the repair expense.
You mean I haven't shared the screen, huh?
No. That look
Sorry,
of
ladies. Sorry, ladies. Good thing we have all this. Good thing we have extra time, huh?
seriously.
So here's what I've been babbling about, Aranza and Rodrigo. Take a look. We'll start again. I'm going to have to try to trim that out of the class here. Okay. Here's a T account. Notice it says plus on the debit side and it says plus on the credit side. That's because assets, expenses, and drawings have a normal debit balance. Normal balance. Normal debit balance. After eating dinner, let's read comics. Liabilities, revenue, and capital. Fix that. Do you think this would help a little bit, Anthony?
It helps.
Yeah, like I said, everybody fights with the debits and credits. If we were in the classroom, I'd be doing a lot of this stuff. I'd be walking around the class and pointing to somebody and saying, prepaid insurance, debit or credit. And you got to get to the point automatically, debit.
Yeah, I don't learn so well online because I'm a kinesthetic learner, but you know, it is what it is and I'm doing my best. So
yeah, as an auto repair guy, that's about as kinesthetic as it can get, right?
yeah, seriously.
What do you think, Aranza? Aranza's looking at me as if to say, I don't know what this is.
No, I mean, it's making sense. It's just a lot of repetition, which is really, really nice because that way it gets stuck in your head.
Yeah, there's really no other way to learn the debits and credits other than doing your homework and thinking about it. Remember, assets have a debit balance, right? Assets equal liabilities plus equity. Therefore, liabilities and equities have to have a normal credit balance. And what do we mean by a normal balance of an account, Aranza?
A normal balance.
Yeah, when we say an asset has a normal balance of a debit, what do we mean?
You're increasing it on the right.
Yes,
On the left,
exactly.
sorry.
Exactly. You couldn't have said any better. You hit the right exact word. Yeah, the normal balance of an account in your chart of accounts is left or right, debit or credit, which increases it. That's why if you go out and you buy some equipment for $1,000, you're going to debit equipment, which is an asset, and credit lets, which is a liability. Okay. How you doing, Rodrigo?
Real good.
What do you think? You following along here?
Yeah, when I'm doing the homework, I have my little notes, and I
Good.
think without this guy showing me which one's what, it's hard to guess. I mean, I have the assets. I don't know if you can see here.
I can't quite see it, but I get the idea.
Yeah,
I can
so
see it
I
now.
keep the chart of assets, what's a debit, credit, which is plus, which is minus, and I literally have to refer to it as I'm doing the homework.
Right,
It's
right.
not
And-
automatic yet. So I'm having
and that's
look,
quite-
check, okay.
Yeah,
Yeah.
and that's quite normal. When you get into 230, hopefully we're going to take 230. You'll be glad you took 110
Yeah,
because a lot of those students
I
in
think that's why I'm
230.
here.
Okay, good to hear.
Yeah.
Because a lot of students go right into 230 without doing this, and they learn this whole course. Most of this whole course in like 4 weeks, say,
Yeah,
if it's a long semester. And you can sit back and kind of be a little bit smug and watch them fight with the debits and credits. Hopefully by the time you get there, it's not a problem. So, do you have any questions on anything we've done so far in the homework or the class so far, Rodrigo?
no, I'm almost done with chapter 4 homework. I'll finish that tonight.
Okay.
So far so good.
It's a lot of homework, huh?
Yeah.
Yeah, I had one of your classmates join me at tutoring last night, and she was stuck on a homework piece. And I looked at it; it was like 14 different things in.
Oh, I know. That's probably the part I left for tonight.
Yeah, so you have your work cut out for you, and
I don't know
then
if you noticed,
and
but I'm starting my homework at 9 when I put the kids down. I'm usually done right before due time, so I'm submitting at 11:58.
Yeah, I did notice a lot of people getting in under the wire. Cornelia, it looks like my boss is doing the grading of this course, which I didn't know. So she's the one who's been looking at the homework and at the summaries.
Okay.
But yeah, get that homework in. You want to get to the point, you want to really scoop up all the easy points. And I consider the homework easy because you do it at your own leisure,
Yeah.
at your own leisure. Those summaries are worth 40 points. My goodness. You'd be crazy not to turn those in on time, right?
Yeah.
You know what I do for my summaries is I rewrite everything that I don't grasp as my summary, and it works out really well because I write it, I reread it, and then I read it out loud, and it really helps me.
That's great. That's not like 25 pages though, if you do it that way, right, Anthony?
Oh my goodness.
No,
I wouldn't be able to stop if that were the case, but at least the points that I believe that I need for whatever chapter we're on, I'll go over it. Like for example, like this setup, this will be like my last page for my summary.
Yeah.
So I at least got the source, got the journal aspect written down, and then now would
Excellent.
be actually applying it.
Excellent.
Yeah,
Okay.
we'll see.
Yeah. I tell you one thing, I took this PowerPoint slide directly from Canvas, like you guys could do it if you wanted. There is another PowerPoint slide that I should have used that's much longer and more detailed, but Professor Alsheimer probably picked this one for a good reason. It's a good bite-sized amount for where we are right now, huh?
It works.
All right. Hey, Aranzi, you all excited? The baseball season starts in a week.
Sort of. I don't really watch baseball.
How about the NCAA tournament? March Madness begins today. No?
Oh, does it really? Okay.
Rodrigo, you follow the sports at all?
Nah.
Really, that leaves you, Anthony. I know you're a baseball guy.
Absolutely.
By the way, real quick before I let you guys go, I'll torture you. One of your classmates, came to me for tutoring last week, and you know me, I always say, "Hey, you like sports, pal?" Because I'm a big sports fan. He says, "Yeah, I'm a big baseball fan." He has traveled to every Major League Baseball park.
Okay, that's cool.
Yeah, well, you've heard of guys doing that. And he got in a car, he told me, and he drove 24 hours straight with 2 other friends to go to the World Series in Texas. So he has
Really
me
cool.
beat. Huh?
Yeah.
Okay, do I hear a motion to close the meeting, Aranza?
No, I just think that's really cool. I think that's awesome when people just kind of go with it. They're like, you know what, let's just do it. Let's go out there.
Yeah, I'm jealous of you guys. All right, well, I'll let you go. We had a short class today, but I think it was an important one. So now you got the full range here. You know what the chart of accounts is, you know what a journal entry is and what the general ledger is. Now it's a matter of mastering those debits and credits, and next class we're gonna do some statements, okay?
Okay,
All right.
sounds good.
Okay, good night, everybody.
Thank you.
Yeah.
See you later.